Hi, this is David Reyes. Thanks for joining me. Today I was thinking about a topic that I think is important. And when you're meeting with an advisor, or I think anybody relative to their services, is what is their process? We have what's called a 3-meeting process. And this has been developed over 24 years of doing this as an advisor to try to make it really client friendly. I would say it's not about me, it's about you. And I truly mean that because the planning side is easy. It really is. It's the people that make it unique. And over time, I've learned that it makes everybody's interesting. Everybody has a story. So if you come from that mindset, then it's a lot more fun. So in our first meeting, I call it a rapport meeting, first date, whatever you want to call it. And that's really just getting to know you on a personal level. I always used to say that I'm half camp counselor and half advisor. And really, I mean that because we're talking about very personal things. Money is a very personal issue. I call it the mistress. We have a relationship with our money, just like we have relationships with our kids and our wife and our friends and family. So it's a whole relationship. So part of it is how do you perceive your money? What does it mean to you? Do you really care about it relative to traveling the world? Do you want to give it to your kids? Do you want to spend every last dollar? All those types of things. So the first meeting is really just about you. I spend about 80% of the time listening and about 20% of the time talking because I have to be able to be a good listener to help you to understand what's most important. So in that first meeting, it's generally about an hour and a half. Can be longer, can be shorter, but about a 90-minute meeting. Then what happens is we decide to go forward, and I'm not charging you to do this, so our whole second opinion process is complimentary. So the second meeting is where we kind of get into the real meat. And I'll have received from you in the first meeting your statements, your tax returns, your trust, Social Security, all these types of statements that I need to do a thorough review. So in the second meeting, I'm prepared to review your portfolio. We'll go over the risk of your portfolio. Most of you have a lot more risk in your portfolios than you think that you do. Typically, most of you have what I call 30% risk, meaning that in a traditional down market like 2000 or 2008, with your current portfolio, you would lose about 30% or 300,000 per million. Now I know none of you want that kind of risk because I meet with you every day. I always say, how much do you want to lose in retirement? Everybody says 0, right? So but your portfolios aren't designed that way. So I get into the risk of your portfolio, the true risk of the portfolio. Secondarily, we talk about the fees that are inside of your investments. Most of you own a lot of mutual funds. Mutual funds can be very expensive. There's a lot better ways to manage money. You can use stocks, you can use exchange traded funds, which are kind of the new iteration of a less expensive, more liquid mutual fund alternative. There's many other different ways. So in that particular meeting, we're going through the fees, we're going through the risk that you have in the portfolio. And at that point in time, I'm already ready to do a little mini plan for you, mini retirement plan. So what happens in the next meeting, the third meeting, and it depends how fast we get through these things, but typically it's 3 meetings, sometimes it's only 2. But in the third meeting, we're going through the retirement plan, and I've put together a proposed or draft plan where I've used what I know about you, and I have put an investment plan together to meet those needs. And I call it reverse engineering the plan. So meaning we start with the begin in mind. And what that is what are the goals? And then I'm going to backfill, I'm going to reverse engineer and say, okay, what is the safest way to achieve our goals to make sure we never run out of money? And that's really important because the investments are purely a means to an end. They are not the end. Most of you go to an advisor saying, here's the best portfolio ever. Here's what we do. Well, if you're walking into a room and an advisor tells you that, run the other way because they're selling you something. The only way to truly understand what type of investments that you need, first off, you have to be with an advisor that works with annuities, stocks, bonds, alternative investments like real estate that do not have a vested interest in a single type of stock, bond, or annuity, that type of thing. So if you have these types of I would say options to put together for a client, you can be much more free to just tell you, hey, based upon the income that you need, based upon your risk, this is what the best portfolio for you to have to make sure you have the best quality of life with the least amount of risk and make sure you never run out of money. So hopefully that helps. I get this question often. This is David Reyes. Take care.